Hello everybody, welcome back to the channel. Today is a huge day for the housing market. Now I just want to apologize. I do have the gardeners outside and they are cutting the grass. So if you hear like a machine sound, that's their little motorized grass cutters and whatnot, basically making a lot of noise and making it hard to make these videos. But I just want to apologize for that, but I want to get this news out to you right now because this is huge, right? So this is when the rates basically went up. We knew they were going to go up, and here they are, 30 fixed rate at 6.3%, and we're basically almost at the highest it's been since they started raising the rates back in early June, right? So what does this mean? And I wanted to bring this out. Now, look, guys, very, very easy. Just go to Google, type in mortgage rates, and you're going to get this chart. And this is very important to kind of start doing some research. I wanted to jump into something very, very important, which is right here, your credit score, okay? A lot of people, some people don't care about a credit score. You know, some people pay their credit card late, and I'm gonna tell you how you get penalized for that. If you were to look at this credit score of 760, now you know it goes all the way up to 800. I think the top is like what, 850 or something like that. Anyways, anything above 800 is excellent credit, and then it goes as low as 580. So what does this mean, right? Let me show you how important your credit is. If your credit is in the tank at this level below 600, you basically can't even get you can't even get a loan, right? They're not even telling you what your fixed rate is. It's like nothing, basically, right? Basically, the banks are gonna say, sorry, Charlie, you do not, we're not gonna give you any money. Again, 600 to 620, they're not gonna help you out either. It's only at 620 to 640 that you are able to borrow. And look at that rate. They're gonna hit you up with almost a point higher than if you were to have great credit score. And that makes a huge, huge difference, at the, when you have to pay your mortgage. Again, look at the rate 7.432 at this level. And when you go to 800, it drops almost over 1%. So moral of the story is you have to protect your credit. You have to make sure that you always pay your bills on time, because it's only going to hurt you, and you're only going to pay more for the same stuff that your neighbor, possibly with a higher credit score, is paying a lot less than you. So just remember that. It's very, very, very important. Now look at this. When we jump over to the mortgage calculator, so let's see what it all means, right? Right now, if we look at a 30-year fixed, 400,000, you're at 6.3 interest rate. Your monthly payment would be $2,493. Let's go ahead and include taxes. So all in with taxes included, this will be in California. You will be paying $3,160. Now this is on $500,000 house with your payment of 20%. You put down $100,000. And with the interest rate of 6.33. Now that is if you have your credit score is 800 and up. Now let's take it down all the way down to this one, 620 to 640, and we'll see how much it changes. Now it's at 3,160, and boom, they add. When you lower the credit score and the interest rate goes up, they add about another $300 to your payment. So again, people with lower credit scores have to pay more, and that really, really sucks. So let's just go back. What really does change? Okay, so really the change is on the loan amount. Again, taxes and fees are always the same. So this is what we're looking at now, 500,000. Now I did put 20% down. It is somewhat important to put 20% down. I think it's because you're gonna eventually get better rates, and you don't have to pay PMI insurance. Now, it's not the end of the world if you pay PMI insurance, but again, if you have low credit score and you're putting less than 20% down, you could see how all the bills start adding up. Now, if you're putting 20% down and you do have a great credit score, then yeah, it makes sense that, if you have to get PMI, okay, fine, that makes sense. But the problem is, what if you have a really bad credit score and you're paying the higher interest rate and you're only putting 3% down. They're gonna, they're gonna ding you for like that extra 300 plus an extra like 150 for PMI. Again, at the end of the day, you're paying like extra $500, $600, $700 just because you have a low credit score and you're not putting 20% down. So I always encourage people to try your best to get that 20% because it really does pay out in the long run. Now, if we look at a 30-year FHA, first-time home buyers, it does drop a little bit more. That is great. So if this is your first home, you are going to get a little bit of a break here. Again, rates have gone up, right? It's just the way it is. And it's going to probably stay like this for a long time. I've been reading some articles that are basically saying just that. They're saying, hey, don't expect these rates to come down because, again, the Feds need to tackle inflation, and this is the best way they know how to do it. Raise the rates, basically make everything more expensive, suck money out of the economy, and use that money to pay off our debt. But at the same time, the problem is that, by raising the rates, it does slow down the economy, which could take us into a huge recession. We are already in a huge housing bubble. The housing bubble is starting to pop. We're seeing prices go down, up and down on every single city. There's so many price drops. This is only going to make it worse. And, for people that are in the market of buying, you guys are going to have an amazing opportunity in the next few months. In my opinion, I would not buy anytime soon just because everything is kind of falling apart right now. I would wait, because I think if you find a neighborhood that you love, I think that and you find a house that you love, I think that if in like 6 months, you could probably find that either that same house or another house in that neighborhood for a lot cheaper than what you would be getting at right now. Remember, going into winter, real estate totally slows down because a lot of the country is basically under snow and nobody wants to buy a house when it's snowing. Could you imagine having to move in, to a new house with an icy driveway? No way. Seems like very, very dangerous. But besides that, people like to move in the summer. Why? Because the kids are out of school, and if they have to start a new school district, then it's a lot easier to start at the beginning of the year. A lot of reasons why people like to move, buy houses in the summer. So if you are in the market to buy a house and you're buying in a budget, my opinion and my recommendation would be just wait till about January, February. I think prices are going to be a lot lower. Remember, prices are falling fast, guys. Look at this. If we jump over to the Redfin weekly housing market data, you could see since the rates basically topped off, we have seen a huge decline. Now, rates are back up. So what do you think is going to happen? I think that we're going to cross that 2021 level very, very soon here, and prices probably will continue to fall into the 2019 level, maybe even below it. It's going to be interesting to see that happen, but it's going to be for people trying to get into the market. Finally, if this is your first home, this might be great opportunity. Just make sure you have your down payment ready. Make sure that you have at least 2 years of W-2s, which is definitely going to make it easier. You're going to be able to get a lower rate. Remember, if you're a private contractor, man, they really stick it to you because the banks think that you're not as reliable as someone who's been working at a more stable job for, or a corporation for over 2 years. Again, W-2s definitely get rewarded better than, private contractors. So my recommendation is if you're looking to buy a house, you're going to have a lot of opportunities in the next year, 6 months to a year, maybe 2 years. So, if you don't have a W-2 job, maybe start looking for one. It could really, really help you out. Trust me, guys, on this one. And yeah, again, try to save that 20%. Now, I'm going to go ahead and finish this video. Again, market is going to crash very, very soon. I definitely believe it with these interest rates where they are, and demand has already slowed down. It's only going to make things worse. Now, I just want to say a big, big thank you to everybody who's been supporting my channel and watching my videos, leaving comments and likes. It's awesome. Thank you so much. It really does mean a lot to me. Now, if you're new to my channel and you like what I have to say, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.